Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, August 25th, 2008. Well, once again, folks, we nailed the call, and you guys can look at the markets today to see what kind of sell-off happened after we cautioned on Friday that Monday or Tuesday would be a dramatic sell-off, and today we saw the fruits of that call. Dow down 241 points, Nasdaq down 50 points, and S&P down over 25. 2% across the board on the indexes was the decline. Now, we had talked about this on Friday and said there was a high probability of a major decline Monday or Tuesday. We had calculated it out based on our proprietary techniques, and we had seen that there were signals that something was going to happen Monday or Tuesday. Sure enough, Monday comes, market dramatic sell-off, call is made, call is correct. Now, just last week we called the commodity bounce dead on, and the calls are really coming beautifully right now. The market's really telling us based on our techniques what the next major move in the market will be on a one-day basis or even a major move over the course of a week or so basis. And we're going to get into that in today's video, but before we do, let's just refresh everyone's idea of what's going on tomorrow, guys. Tomorrow we have the webinar. It's a two-part series webinar, Tuesday and Wednesday, and we're basically going to cover everything that's on this list right here, okay? So anything you see right in this area, in the money stocks, techniques used in market analysis, the webinar, you can sign up. It's approximately a 4-hour webinar. It always runs a little over, and you can see here it's Tuesday and Wednesday right up here. The dates Tuesday and Wednesday, August 26th, 27th, 6:30 p.m. to 8:45 p.m. Eastern Time. That's Eastern Time. Just click right here to sign up. And again, we go over all our proprietary, or a good portion of it anyways, of the stuff that you can calculate easily, or just reading the charts. You can look at the various patterns, price, time, you name it. What we've been so accurate on will be covered in that to a large extent. So we definitely encourage you to come join the webinar and see really what makes InTheMoneyStocks.com 10 times to 100 times better than every other market timing company out there, as we continue to be dead on for the last year and a half. And the recent call for today, dead on. Last week, commodity call for a bounce, dead on. So you can just see the track record, obviously, in our calls, and you can go back and look at the videos. These videos stay on YouTube forever, so those of you that want to go check it out, go a year ago, go whenever you want, and you can check it out as well for yourself. Alrighty, folks, so let's get into the market today, because again, the dramatic sell-off that we had called for did happen, and we are going to switch our stance now to a neutral bias. We had talked on Friday about going to that negative bias, expecting the sharp decline, but we had talked about how it was only going to be a one-day event, maybe a little more, maybe it drifts into tomorrow, but the large portion of the drop, had, at least for today, happened. And that's what we were looking for. So we're going to move back into a neutral bias here for the next day or so going into the midweek. And then, again, we're going to look at the light volume indications going into later this week and see if that is any type of kind of initial ideal or idea towards what the market will give us later this week. So, again, sharp decline, and it really started right from 8:30, guys. I mean, you had the market upticking here pre-market, and these are the futures we're looking at right now on the intraday 10-minute basis. And what you can see is really right around 8:30, the market just started to collapse. It collapsed all the way down to the 200 moving average, consolidated, dropped, bounced, dropped hard, bounced, bearish flag pattern right there. Heavy shot down here to the lunchtime, right around the lunchtime area. And then we saw a sideways trend really into the close. And you can see really that low that was made a little after 12 o'clock, 12 p.m. Eastern Time, was really, if you draw a line, a flat line right across, that's where we closed today. And yeah, we were up a little bit, but then we hit the 20 moving average, we dipped down, we tested it, we failed, and you sold off a little bit and rallied back into the close right on that line. So again, hard sell-off, but the volume was, again, very light, and that's why we do over the next week or two still favor the upside in this market, but you had to expect it. I mean, at least the indicators were pointing that to us, so keep that in mind, folks. We'll keep a close look on this and continue to analyze it if there's anything more significant in this fall than just a one-day to two-day affair. Alright, so again, back to a neutral stance after the dramatic drop today that we had expected, and we will now take a look at the daily charts to see what they're telling us. Now, here on the daily charts, we're going to go back to our trend line supports, and again, we had talked about Friday, the keys to this line, and remember, guys, the uniqueness of this line that we had put in, and remember, I'm just going to go back to it. We talked about how if we broke this line, we had to confirm it. And that was another fantastic call on our part. We broke the line. Did we ever confirm it? Did we ever close below or even get below that day? No. We traded up a couple days. We hit the upside resistance line, which was, remember, this support line right here became the resistance line after we broke. So notice how we traded up to it to Friday. We hit it, and then you sold off again today, right down to that line again. So now we're just kind of hovering in this little bit of an area, bouncing back and forth between support, resistance. All right, and you still have those moving averages playing games with it as well. So that's what we have to follow. Light volume again. Look at these last 3 days in volume. So light on the S&P futures. Just very light. And we have to also know that and understand that in light volume, moves are often accentuated. They're bigger because there's just not a lot of volume to go against the move or buy the move down or sell the move up. So you get bigger moves as lighter volume players, especially a lot of the traders are taking this week off based on the next coming holiday weekend next weekend. So be aware of that. Once we get back into the trading mid-next week or so after the holiday and so forth and the lag day, which could be Tuesday, then you really get some volume to probably come back in this market as the kids are back at school and so forth after summer. So anyways, no slight on this call today, but again, you can see the past calls and how accurate they've been. We can show the USO today, which we had called for this beautiful move up, and this is the USO daily chart. And you had the big fall, then you had a little flat day today. It was really a pause day today. We still haven't hit that 200, and the amazing thing about the 200 moving average here now is that we had talked about this moving average as being a key that was probably not going to be hit because just too many people were waiting for it. And sure enough, we still haven't hit it. We bounced off it, we came back down, we bounced up, or a flat day today, and we still haven't hit it on the USO. On the GLD, you saw a big move off our call right here for a bounce, and look at that bounce on gold. That is a huge bounce. Really, I didn't do the retracement numbers on this, but it could be a 0.382 or something like that, right in that 30% retrace level all the way back up here. I'd have to calculate it out. Nonetheless, you touch the 20 moving average. First hit the 20s, a pullback. Sure enough, you had a pullback on Friday and a pause day today. So we will continue to evaluate the commodities as the commodities have pulled off their recent bounces, but are still hovering off the lows of early last week and the prior week. All right. Now, again, what could be coming? Because I want to take a look at the Nasdaq and really analyze this chart now. And I brought up the Nasdaq on the daily chart, and you can see the parabolic move the Nasdaq had. All right, all the way up to this 200 moving average, and it really stalled around that 200. And I love the fact that they broke the 200 a couple times here, especially this day, because that's always something that I try to impress upon you guys that are watching these videos. If there's one thing I want you guys to take out of it, is that it's to expect the unexpected. When the masses expect something, think about it the opposite way. And again, this proves it. And I always talk about it on double bottoms as they break the lows to kind of get the stops out and kind of flush the weak hands out. So they dump and because they think it's going lower, and then after that it does bounce. But the key here, guys, is look at this day. All right, here's the 200 moving averages. Do you know how many people here thought this was a bullish move on the Nasdaq when you closed above the 200 for the first day? Here you pierced it. All right, let's go over here. Here you pierced it. Here you pierced it again. Finally closed it above, and everyone said, there we go, guys. Here we go. This must be a great thing. Well, those of us that are, a little more advanced traders that understand psychology are saying to ourselves, well, wait a minute. Let's not be too hasty here because this is exactly what they're doing, and this is such an extension move that the risk-reward is not in your favor on the long side here. So that's a no play or a short if you want to really take the risk there, but it's definitely not a long play. And sure enough, look at the fall back down. After they got a few of the amateurs and the weak hands to go long here, they flush it right back down, and then we're trading in this little range between the 20 and the 50 moving average. The 200 and the 20 moving average here now. But that's the one thing I really want to impress upon you is don't get fooled by the little flip-flops here. A close below a moving average or above, unless it confirms, is not always going to be a solid play there, okay? Nothing's 100% in the market anyways, but how many times have we seen it close above a moving average after an extension move like that, and all the weak hands jump long and they just get taken right out? And we really hate to see that. I mean, this is all about a learning and everyone improving their trading skills in these videos, so I do hope you guys take that to heart. In any case, looking at the Nasdaq, you have resistance here at the 200. Boom. Support right here at the 20. Now we have support right below the 20 right here on the 50 moving average. So you have a double support line, one right here where we're really right on top of today at the close. We even closed a little bit below it. Next support would be right here. Now we're going to have to see where this market trades these next couple days. The light volume will be very, very light. We do have some economic numbers coming over the next few days, plus the FOMC minutes tomorrow at 2 p.m. Eastern Time. Probably give the market a little jolt one way or the other. Thursday GDP, that's going to be big. All right, and that's something that we definitely have to watch for. But let's be honest, folks. There was no major new. It's funny because this is something my partner and I were discussing today. How we were watching these media outlets for the markets, and everyone was trying to speculate on why the market was dumping today. It didn't matter. My partner and I didn't foresee the future and know what the economic numbers were going to be today, or say this is going to happen. It's going to call. We just read the charts. And it just goes to show you that the charts are king. News is all a lagging indicator, all right? That's all it is, and the charts are going to do what they do regardless of the news, all right? Now, the news can cause an initial reaction, which is an initial spike up or spike down, but then it always fluctuates back to that equilibrium wherever the chart says it should go. In any case, folks, come join the webinar tomorrow. Fantastic webinar. Nick will run it personally. He's the one that made the call for the down day today. Just a fantastic guy, fantastic knowledge on the markets. Also join the swing trade alerts and the chat room. See you all tomorrow for another crazy day. Take care.